Hey everybody, JC Parets here of All Star Charts, and I am joined by my main man, Mr. Phil Pearlman.
JC, what's up, man?
What's up, Philly Pearls? How long have we been doing this, you and me, huh?
We've been doing this forever. We've been doing it since BC, before crypto.
Man, we were
Way
doing
back.
the Fridays with All Star Charts, Phil and JC talking charts. Those are good times back in the day.
It was really classic stuff.
So Pearlman calls me last week. He's like, "Hey JC, so what kind of sentiment analysis are you guys doing on crypto?" So I start going down the list, and he's like, "All right, let's do a video." I'm like, "Pearlman, I'm at the beach." He's like, "Let's do it anyway." I'm like, "No, let's do it next week when I'm back from the beach." And now Pearlman's at the lake. Pearlman's like, "Lake, no lake, let's go, baby."
Yeah, see, that's dedication, JC. Even if you're at the lake, I'm making the commitment to click the Zoom and get on air with you, my friend.
You're an overachiever, Pearlman.
I'm an overachiever.
What you do?
It's just all the grind. I'm grinding.
Dude, look at that background you got back there. You're just living the dream, huh?
It's the Red Mill Pond.
So Pearlman wants to talk about crypto sentiment, and before we get into a couple of interesting indicators that we like to pay attention to, I think it would be irresponsible not to start with price, because if you want to get an indication of how investors are feeling, price is a pretty good one, Pearlman. I don't know if you heard.
Well, this is the thing, and people don't understand this, but this is very critical. Price behavior and emotions are intrinsically linked together. So you can't just like separate them and look at one or look at the other without putting them in concert. And so, beginning with price, it pays, as our boy Shannon says, price pays. And so it is the place to begin.
It's the only thing that's going to pay us. I mean, nobody in the history of markets has ever made a penny for knowing why, right? We get paid
Or how
to
they
know
feel.
what and when, for how long, right?
Right.
All right. So let's start with the first chart. Is Bitcoin, right? So you wanted to talk about Bitcoin. You want to focus on this particular market. And what are we looking at here? We're looking at this distributive top, right? Just classic, as somebody like yourself who has been trading and following markets for decades, you've seen this sort of pattern before, right? It takes time. Tops are not an event. It takes time, right? It's a process, right? Haven't you seen this before?
So we have the top there, the rounded top. And then what happens? That's May, right?
Right. So then in
April,
May, we break support. Some might, technicians call this a neckline, right? So we broke support. So now all of this support, the thesis was that would turn into resistance on the way up. So when we were buying Bitcoin near 30,000, the logical target was that former level of support, right around 47, 48,000. And then we got there. And my suspicion was at the time that it was gonna be a process for demand to be able to absorb that overhead supply, right? We weren't just gonna rip right through it. And I figured it would take some time. As it turns out, based on what I'm seeing, it's really only taken a couple of weeks, Pearlman. So as usual, the market doesn't care what JC thinks, right?
So this is the elevator up, and you don't usually see that with price and equity markets. You see a slower recovery, but this thing is moonshot back into this zone that is critical to you. You were telling me before we got on that we're at a critical place, and I know people always say that, critical juncture, but we really are at this moment.
Bitcoin's got to stick the landing, Pearlman. So all of that support turned into resistance a little bit. Like I said, I figured it would turn into resistance longer. But again, the market doesn't care what I think. So it's got to stick the landing. So if you're seeing Bitcoin in the 50s, right now we're sitting, as we're recording this, right at 49,400. So technically we're above that. But I would argue we're still probably in that zone. Remember, support and resistance, we don't draw these lines with sharp pencils. We draw them with crayons, right? Think of it like a mattress. One of your kids, you get a hotel room, your kids jump in, they start jumping on the bed, right? The mattress has some give. Support and resistance is the same way. That's how we see it.
Okay, so now let's look at some other indicators. So here's the thing about sentiment and crypto. We've been studying sentiment in the equity markets forever, and we have indicators that are used, that are widely available. Everybody looks at them, and they have stood the test of time for better or worse. They're not perfect. I'm not saying they're perfect,
Far
but
from it.
far from it. But in the crypto markets, it's a lot younger market, right? And, even just Bitcoin's only been around for, 12 years or whatever. And we don't have, and, looking around, before I called you, I was actually just looking around for sentiment indicators, and I saw one fear and greed indicator, and I was looking at the components of it, and I was like, well, there's a lot going on here. Not sure if it's really, I know you've done some work with the CNN fear and greed indicator. I'm not going to get into all that right now. There's a lot going on. I wanted a little bit more pure essence of what's going on sentiment and why we use certain indicators. So we're really in a formative time of sentiment analysis for crypto, and that's where you come in. So you have price, right? We came down from the 60s to 29. Now we've bounced to 50 or so, 49, 50 as we speak. And by the way, we're going to put this in our newsletter on Thursday morning on the Osprey Funds newsletter. We're talking though on Tuesday. So a world can happen in between, but nonetheless, there's going to be some flavor here that's important, even if you're looking in the rear view mirror a little bit. So, okay. So you have some other indicators that you were telling me about the other day on the phone. The first one is the average coin dormancy. Why don't you tell us what that is? And then tell us a little bit how you're using it.
Yeah. So as you can see here, during speculative moments in the market, what you're going to see a lot of coins that are actively traded. So here we're looking at the total supply of coins being traded that has been traded within the last 24 hours. So active coins. So the dormancy is less, if you will. So the lower the chart goes, this orange line, the lower it goes, the longer these coins have been dormant, the average trade, right? So what we've seen at near speculative tops is a lot of trading, a lot of enthusiasm, a lot of new coins that continue to get traded, right? That's the type of behavior you normally see near tops. What are we seeing today? We're seeing the exact opposite. So what does that suggest to us? That the hodlers are hodling. Right?
So wait a minute. I just want to back up 1 minute. So when you were telling me about this on the phone the other day, and I've looked at it before, the way I was thinking about it was a little bit like a casino. And when there's a lot of action, you're at a craps table or you're at a blackjack table and there's a lot of action and a lot of chips are being thrown around. That is like little dormancy. Those chips are active. You got 11, you got $25 yo going out there at the craps table, or the hard ways going out. A lot of action. That's what you're seeing where the dormancy is low. And so this chart, the orange line is an inverse chart. Is that correct?
No, the chart is legit. It just shows the number of coins, right, that have been traded that haven't been touched in 24 hours, right? Or that have been traded in 24 hours. So the lower it goes, the longer these coins have been held. So think of it literally. This is the definition of weak hands versus diamond hands, to put it in the parlance of the kids today, right? Perfect. So this is the diamond hands are the ones that are not trading it. The weak hands, right, are less and less, fewer and fewer weak hands are trading it, right? So in other words, the short story long, if you will, the hodlers are hodling, which is a good thing, right? That's evidence of accumulation. It's not evidence of distribution.
And so when are these two tops here that you have circled?
So one of them is the March capitulation. So at this point, just people dumping. So that's kind of like an outlier. That's obviously not what's going on here. So we can't really compare apples to apples. But if you look back earlier this year, before the market started topping, right? In gray, you're looking at the chart of Bitcoin. In orange, you're looking at the dormancy. And when you could see that spike in the weak hands trading these coins, that's evidence of too much exuberance, too much enthusiasm that we tend to see near top. So what's really interesting, right now, we're not in any sort of capitulation. Bitcoin's not crashing, so we can't compare it to this particular moment. We can compare it to this moment. Bitcoin is doing well. Cryptocurrencies, as we'll look at in a minute, more and more of them keep making new highs. We're seeing breadth expansion in crypto, but we're just not seeing the enthusiasm. This is a chart that basically represents my high school friends calling me and asking me, JC, which cryptocurrencies should I be buying, right? Like that's this chart, and that's just simply not what's going on. In fact, and this is all anecdotal, here we're looking at actual data. My high school friends are more anecdotal, but I will tell you, every conversation I have with my high school and even college friends, they're scared to death to touch any of this stuff because they've touched the stove before and they don't want to get burnt like they did last time. I think that's bullish, Pearlman.
So it's almost a divergence, if you will. You have an increase in the hodlers, even though you have an increase in price since the May bottom.
On a relative basis, right? So when you look at the fact that we're making new lows in terms of coins that have been traded in the last 24 hours, that's the definition of weak hands not really participating here, right? It's really the hodlers hodling. That's the idea. When you see that orange line spiking like we did earlier this year, that's the heads up that things are getting a little frothy, right? That's basically the deal here.
Okay, so let's move on to exchange balances. The other sentiment indicator, and you're kind of inventing this stuff as you go along, and I know others have talked about it to a degree, but the way you're integrating it, I love. Exchange balances, how are you using that as a, first of all, what is that? And how are you using that as a sentiment indicator?
Right. So presumably when, and by the way, you know, the other day I was in, Tyler Wood at the CMT Association introduced me as a veteran crypto trader or an experienced crypto trader. And I'm like, Tyler, first of all, that's not a thing, right? We're all like new to this. We're all trying to figure it out.
Nobody's been doing this for 25 years.
Experienced crypto trader. What are you talking about, Tyler? So I appreciate that though, but no. So what we're looking at is the exchange balances. So presumably when the coins are removed from the exchanges and put into their wallets, right? That means that they're going to be hanging on to those, right? So that's the idea. So we're looking at the exchange balances in purple, right? So in purple, we're looking at the exchange balances inverted. So as the exchange balances are going down, presumably those are the Bitcoins being moved over to the wallets. So since the purple line is inverted, it moves exactly like the pink line, which is Bitcoin. And as you can see, they move together. They're either coincident or slightly leading. So as you see higher highs in price and new lows in exchange balances, that is bullish, obviously. If you start to see the inverse and you start to see the exchange balances increasing, I would argue that would be evidence of distribution, and we're not seeing that at all.
And so you're saying that supply on the exchanges is decreasing right now. Is that correct?
Correct. So presumably, the Bitcoin is being removed out of the exchanges and put into investors' wallets. And if you're going to be putting it in your wallets, taking it out of the exchanges, you're doing that for a reason, right?
And so what did we see at the July bottom in terms of that?
Well, not much, right? That's really the whole thing. We weren't seeing that crash. We were seeing a divergence, right? So as prices were making slightly lower lows, kind of hovering near that 30,000, we were seeing the exchange balances making slightly new lows, essentially a leading indicator that there was accumulation taking place underneath the surface. It's almost like, you know, think about it like almost like the COT report, like kind of like commercial hedgers versus specs. When we were looking at the dormancy rates, kind of very similar, commercial hedgers versus specs. So for those of you who are experienced traders in traditional markets and look at things like the COT report and trade commodities futures and things of that nature, you're familiar with that. So think of it almost like the same mentality. The hodlers are the hedgers and the weak hands are the specs. And in this particular case, you're seeing accumulation as money's taken, the Bitcoin's taken out of the exchanges and put into the wallets. Those are essentially, you know, the commercial hedgers acting, right? Accumulating. That's institutional accumulation.
Okay, so I have one last question for you, but before I say that, I just want to say you're doing great work here because, you know, nobody has yet integrated this in the way that you're doing it or beginning to do it. And so I look forward to see more where you're going in the future. Now, that said, here's my question for you. What are you looking for in this data, specifically with dormancy and balances, exchange balances? What are you looking for if we're going higher? What do you want to see? Oh, and price, obviously. What are you looking for across those three indicators for you to be, hey, I'm bullish here or bearish?
Listen, new lows in the exchange balances, right? More Bitcoin being moved over to the wallets, most definitely. In terms of price, Bitcoin's got to stick this landing. You know, I figured it would take some time for demand to absorb this supply. It's taken less time than I would have thought, which I would argue is a good thing. The fact that is a bullish thing. The fact that the market is ignoring these obvious levels of resistance, that is a positive. The fact that demand has been able to absorb that supply quicker than I imagined has to be a positive. But again, it's got to stick the landing. If you start losing 46,000 and Bitcoin starts breaking back down towards 44, 45, then we're probably in for some more churning. But here's what I will tell you. If Bitcoin sticks this landing, and so far it has, we're sitting right around 49,100 or so. So far it's holding on that. If Bitcoin's going to get back up to those former highs in the mid 60s, you're looking at a 30% move. What does that mean for the altcoins? That means you're probably going to see doubles and in some cases even triples while Bitcoin rallies another 30%. So Bitcoin sticking this landing is going to have ripple effects across the space. You see what I did there? Ripple effects?
Hey, are you looking, that's beautiful. Are you looking at, we're not going to get into this now because we're low on time, but are you going to get into the relationship between Bitcoin and altcoins in terms of general bullishness for the entire the entire category?
Definitely. Yeah, let's do it. And you know, we've known each other, you and I, for a million years, and we do a lot of breadth analysis, right? It's a weight of the evidence. We're not just looking at the S&P 500 or the Russell 3000. We're looking at the sum of the parts, right? All of the components. So here we're looking at the 65 coins in the FTX futures, and we're looking at the percentage of 30-day highs, and it is increasing, right? So we're getting breadth expansion. We're not getting breadth deterioration, which is really what we've seen in the stock market since February. Over the last 6 months, we've seen less and less upside participation, fewer and fewer sectors making new highs, fewer and fewer countries, indexes making new highs, fewer and fewer stocks making new highs. Just last week alone, we saw more new 52-week lows than new 52-week highs in the stock market, right? So we've been seeing the exact opposite of breadth expansion. What we've been seeing in cryptocurrencies over the last month is breadth expansion. More of them participating, more of them making new highs.
And is there also an analog relative to like defensive sectors and more aggressive sectors, you know, like small cap, value, growth? Are you seeing that kind of relationship too, and what it might mean for the larger market?
We don't have strong relationships where small caps outperforming large caps, if you will, in the crypto space is necessary.
You're talking alt versus Bitcoin. That's alt versus Bitcoin. That's
right. In the stock market, you know, in the entire second half of the late 90s, small caps underperformed and the stock market did just fine, right? So, you know, we want to be careful with the small cap, large cap, offensive, defensive. We've tried to do some work, you know, when the altcoins are outperforming Bitcoin, you would think that there's just evidence of risk appetite. It's less consistent than you would think. So we try not to overthink that. We do see the sector rotation. So we'll see rotation where the DeFi space is leading for a while, and then the exchanges are leading for a while. So I would say the sector rotation is more evident in the crypto space, more so than a risk-on, risk-off scenario. How's that?
And okay, last question, really. This is so fascinating. I keep thinking of more questions. Or are there, or do we just not have enough data yet? Is this market such a young market that we're not quite there yet in terms of, you know, I was talking to Hirsch about seasonality, and he was like, you know, we don't have that many seasons. Do we just not have enough data yet, or are we getting there in that regard?
Yeah, from a seasonality standpoint, I mean, listen, as a technician, you ask.
I don't mean just season. I don't mean just seasonality. I mean, talking about these rotations and leadership and defensive sectors. Do we have enough data to be making these comparisons?
For breadth, absolutely. For momentum, absolutely. For the on-chain analytics, no doubt about it. With respects to seasonality, Jeff's probably right. When it comes to seasonals, I would defer to him. But even if we did have the data, Pearlman, and let's say Bitcoin had been trading for 50 years and we did have the data, where on the list of priorities does seasonality fall? Does it even crack the top 10? Probably not. So it would still be low, just like it is in the stock market. I would just consider us incredibly fortunate to have the data that we have. And in many cases, we have better data in the cryptocurrencies than we do in the stock market because of all the on-chain analytics that we're describing that we just don't have in the stock market.
JC, thanks so much, man. I love you. And I can't thank you enough for doing this. You helped me understand this better. And I love where you're going with this. You know, keep going. I think there's a huge avenue here of discovery, and I don't see anybody doing it the way you are. It's fantastic.
Listen, there's great people doing it. Shout out Glassnode, Coinmetrics doing a great job. TradingView's doing a good job. I mean, listen, we're all in this together. We're all trying to figure it out. We're all new to this, which is cool, right? Like, it's not like, oh my God, that guy's that guy's been on the floor for 70 years. We want to listen to that guy. Like, we don't have those people. So what's really cool is that new data keeps coming. We continue to receive it and, break it down and see if it's worth it to us or not. Usually most of the data we get is worthless, right? It's just what it is. But sometimes we find some good gems that is useful. A couple of these are really interesting and we do find them useful.
Beautiful.
All right, Pearlman, let's do it again, buddy.
Adios.